Good morning, everyone. Hello and welcome to the weekly commodity audiocast. I am Kainat Chainwala from Kotak Securities Commodities Research Desk. And like in every episode, today we will be discussing the commodity market trends. So let's get started. Last week, most risk assets and commodities faced profit taking as traders grew cautious ahead of the US elections. Gold, however, displayed notable resilience over the past month despite a rising US dollar index and increasing US bond yields. Although gold prices have seen temporary pullbacks due to strong US economic data, which heightened expectations for a cautious approach to monetary easing by the Federal Reserve, also Israel's targeted strikes on Iranian military assets weighed on the yellow metal. Still, gold remained steady in the last week of October, closing only modestly lower after hitting a new all-time high of $2801.8 per ounce amid the tightly contested race between Vice President Kamala Harris and former President Donald Trump, reaffirming its status as a safe haven asset. In contrast, silver experienced selling pressure as softness in base metal prices, coupled with the risk of sentiment in the equity markets, weighed on silver, causing traders to take profits. Now, looking forward, both the US elections and Chinese policy developments are expected to influence the metals market, as markets are, there are rumors circulating about a potential Chinese stimulus package worth rupees 10 to 12 trillion yuan, which could support the metals. Silver, therefore, may react to shifts in the dollar index, global equities, and base metal price moves. Moving on to energy complex, last week WTI crude oil dipped below $67 per barrel due to easing supply disruption concerns following reports of talks to end the Lebanon war after a sudden de-escalation of tensions between Israel and Iran. However, oil rebounded from 1-month lows to close the week above $69 per barrel, aided by reports that OPEC Plus may delay a planned output increase and that Iran is preparing to attack Israel from Iraqi territory. Now, crude oil may remain range-bound as the US elections approach, with no significant triggers on the horizon. Post-election, crude oil may continue to trade within a narrow range, although geopolitical developments, particularly rising tensions between Israel and Iran, will warrant a close monitoring. Moving on to NG, for US natural gas, the onset of winter may boost demand, potentially supporting prices. However, adequate supply levels have limited any significant price upside. While natural gas could find support at lower levels, absence of supply constraints keeps its upside potential modest. Overall, while the US elections and rumors of Chinese stimulus are key market drivers, gold's stability amid rising yields and silver's vulnerability to profit taking and range-bound crude all indicate a cautious stance amongst traders. Also, natural gas may experience a slight uptick with colder temperatures but remains constrained by sufficient supply. On the other hand, metals may gain momentum this week as markets anticipate fiscal stimulus from China's National People Congress meeting from November 4th to November 8th. This week is set to be event heavy, with markets closely watching Fed and BOE monetary policy decisions, wherein both the central banks are expected to announce a 25 bips rate cut. This, alongside the US elections, is going to keep markets on edge. So we expect we see the commodity markets set to react to both geopolitical events and economic policies in the coming weeks. So on that note, I conclude this session of the Commodity Audiocast and hope that we've offered you valuable insights. Thank you so much for tuning in today, and we look forward to having you with us again next week. Until then, happy trading. Thank you.